What's up, everyone? Welcome back to the trading world. If you guys are new to my channel, I cover the market every single day, covering all kinds of real trades you can take in the NASDAQ futures market to make real money. So if you guys like that type of content, definitely consider subscribing, leaving a like, following me on X, and checking out my completely free Discord. The link to that is in my bio. So today was a No News Monday. It was September 22nd, 2025, and I did go through Twitter. A lot of people, actually 4 different people, took the exact same trade, so that is definitely interesting. It was a 1-to-1. For me, it didn't really pop off the chart to me because a lot of time these 1-to-1 trades in line with the bias that are just a random inversion don't usually pop off the chart to me because I'm usually looking to frame, more AMD type of trades. But this, it was decent. It was actually, very simple. And if this is your style, take a mental note of this, right? Where we just pop off the low, in line with bias, we close. We get candle body close above an old fair value gap after sweeping out a low, and then we deliver up to an old high. If you guys don't know what inversion fair value gaps are, go watch my video on how to trade them. It's like my most popular video, but yeah. A lot of people really liked that trade, but I'm going to be covering everything in detail, not just that trade, but just everything about the market today. So to start out, let's go on the higher time frame. Higher time frame has been expanding higher, as we've said the last few videos. We had this daily fair value gap here, which the market pushed back down into, and I would actually mark it out as this. This was a high probability daily fair value gap to hold because we broke this high with displacement. And we can actually see this here on this image here, right? We break this daily high with this displacement, and actually you can see the volume imbalance below the gap. That was essentially the exact bottom. Keep in mind these volume imbalances below fair value gaps, they're going to be very sensitive, guys. Okay, so past that, right, we ended up, that was a few days ago. We ended up having a 4-hour fair value gap, or actually no, it was a 1-hour gap today that delivered price higher. And you can see that is right here, right? See that 1-hour gap? You see how the bodies tell the story, but the wicks do the damage, right? This is a very typical thing for the market to do, where the bodies hold the gap and the wicks do the damage, and then we expanded up off of it. And it's important to note that we did rebalance to discount of the most recent price leg. So that was an important factor in this fair value gap being a key level that we could use. So then we can take this key level, which is this 1-hour gap. This was the most obvious key level on the chart, especially, obviously the market's bullish, so we want to look for bullish key levels to take our trades off of. So the first obvious trade here is a very simple flow state. If you guys don't know flow state, go watch my video where I explain flow state. It's a short form video, but essentially you're looking for a higher time frame key level. Here we had that 1-hour gap. Here I show we tap equilibrium, and then we essentially just take an aligned time frame, change in state delivery, retest or close, either one, right? Whether we retest it, which a change state delivery, if you guys don't know that video, go watch that. I explain it. It's a short form video, but essentially it's when we get a candle body close above an old up close candle. And it's important to note that we obviously have a lot of stop losses above these highs here, right? It's very trend liney, and we know that those are that's gonna have a lot of stop losses. So we pop above the high, retest the 5-minute change state delivery, which is this old up close candle. When we close above it, that's a 5-minute change state delivery. So once again, guys, you're looking at the 5-minute chart here. This is what we align with a 1-hour key level, and then we tap that 5-minute change state delivery, measure out the down close candles, project them out. You can see we have the 4th standard deviation perfectly aligned with those low resistance highs. and then we beautifully deliver up to that. And then as well, we had this as a 2022 model, same exact thing, but you'll note that the flow state trades in the 2022 models will basically overlap with each other. I meant 5 minute gap here, by the way, guys. So this is, I meant 2022 5 minute for value gap. But same thing, we sweep out the low, we break structure, and this is something you guys want to take note about is measure out the displacement leg. A lot of the time, we will come perfectly to equilibrium, and entering at equilibrium of the displacement where that 2022 gap is, that's going to be a sniper entry. So I saw all this just a little too late, and I think if I had been able to gather my thoughts just a little faster, I would have, caught either one of those trades. Unfortunately, I figured out the draw on liquidity was higher just a little too late around in this time. So unfortunate, but anyway, we move on, guys. But another thing to note is look at these time-based SMTs. We had a perfect 6-hour time-based SMT with this low, a perfect 90-minute time-based SMT with this low. If you guys have no idea what I'm talking about, time-based SMTs are higher probability than regular SMTs, and I highly recommend you watch my video about sequential SMTs. I have a video on that. It's a short-form video, so go watch that. And so with that in mind, this was going to be a really high probability 2022 model because we had these two time-based SMTs, which were right on top of each other, right? And then another thing to note is, see how this originally, we push up into it and it's high resistance, meaning every single time we push up into it, we fail to break it, we fail to break it, we fail to break it. This break of structure changes that narrative. All of a sudden now, these highs are not going to be high resistance anymore because now we've broken structure. So now, after we break structure, these high resistance highs actually are now going to be low resistance. So you can see how this gap is very, very important. The 2022 model gap is very, very important. Also note how we swept out 7:30, which was true open, and then midnight we were way below midnight as well. So then what happened next? Well, there's a couple more things to look at. We had, let's see here. Yeah, we had a couple more trades. We had a lot of situations throughout the day where, anytime we had any retracement to a gap, the market went higher off of it, right? You can see this, since we were expanding so aggressively, all of the 5-minute gaps held. So you can look for 30-second change in state deliveries off of these 5-minute gaps. There wasn't really one here, but then this one, right? Look for 30-second change in state delivery off of that. So literally any time, we're obviously aggressively expanding. Anytime we're aggressively expanding, take low time frame change in state deliveries off of 5-minute gaps, and that's going to be very, very nice for a trade. So you can see examples of this all through here. Here is one of them. This one happened at 11:56, where basically we have accumulation, manipulation, change in state delivery occurs right here after we sweep the low, and then we retest it right here in the lunch macro, and then we deliver to the 4th standard deviation right at the end of the macro. So, and we also can pair our entry with an inducement of these old lows here to make it higher probability, and then we can put our stop loss either at the low or at the end of the body of the order block or at the end of the wick of the order block. Just honestly do whatever you want with that. And then same thing. Here was the one that happened later on in the day. This was at 13:34. And accumulation, manipulation, change in state. Now this one, if you didn't have stop at the low, you'd get stopped out. But then if you entered on this, it would have hit that 4th. And then I thought this was super, super cool. Look at the new day opening gap. This is a new day opening gap from all the way back here. If you guys don't know what a new day opening gap is, it's going to be the gap between the open and the close of any new day, I mean, it's kind of self-explanatory, right? New day, opening gap. So you can see that was right here, right? The gap between the close and the open of, actually, technically it's a new week opening gap, because this was the close of Friday and the open of Monday. So technically, not only is it a new day opening gap, but it's a new week opening gap. And then if I scroll over on the lower time frame, you can see here that we perfectly tapped the midpoint of that new day / new week opening gap, and then we expand off of it. So one way, super aggressive way to take this, right? But, I honestly just have observed that just take the change instead delivery that makes sense off of the new day opening gap, and just align it with what makes sense with the context of the trade. Now, this is, once again, very aggressive trade here, but 15-second momentum candle changing delivery off of this new day opening gap was nice, and then we had equal highs, and then that ended up going to the fourth standard deviation. So, and note as well, the 10 a.m. candle closed like this, so we're going to expect the next 1 hour and 4 hour candle to continue, right? Because the previous 4 hour candle closed extremely bullish. And the key today, guys, once again, was to notice the SMTs, because once we got these stacked SMTs, essentially, with the market being so bullish, you just had to know that the market was going to go up right at market open. If you had just seen these SMTs, there was no reason to get faked out that we were going to keep going lower, because we had triple stacked SMTs here. Triple stacked SMTs, guys. When we see this, we gotta, especially when the market's this bullish, we just gotta know, market open's gonna deliver price higher. So, with that, guys, I'm gonna end the recap here. Hopefully, you guys learned something. Hopefully, you enjoyed the video. If you guys have any questions, let me know in the comments below. And follow me on Twitter, guys. Follow me on Twitter and join the Discord. Those are the last things I'll say. And with that, I'll see you guys in the next one. Peace out.